My name is Alphinity Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Jake Barnes with me. He's our consumer analyst in the domestic team, and today we will be reflecting a bit on his sector, our positioning and the outlook from here. So Jake, as a starting point, globally consumers have actually been pretty resilient this year, despite a lot of themes that you would expect them not to be, and sentiment being quite negative. Is that still the case here in Australia as well? And if so, why do you think that is?
I think that's broadly correct here as well, Elfreda. I think it's fair to describe the domestic consumer environment as being surprisingly robust, with aggregate demand holding up very well for an extended period. It's probably particularly surprising given we're cycling some very robust stimulus-driven COVID trading periods, and we have had an extended period of ostensibly poor consumer sentiment as judged by the survey data. Though I would say more recently we are starting to see consumer behaviour change. I think there's an increasing propensity to look for more value options. We're seeing evidence of this from the retailers across the spectrum, but particularly the supermarkets and the suppliers to the supermarkets, who've called out down trading within the categories, with consumers looking for cheaper options. We're also seeing the start of what appears to be an emergent trend of eating in as opposed to dining out, which has been very robust for a long period post-COVID. And I think that does reflect consumers starting to tighten the belt a bit.
Yeah, absolutely. And you would expect that given what's been happening with the interest rate environment and certainly a lot of pressures across the board. So moving on to our current positioning. So in that backdrop, it does sound like you should be relatively defensively positioned. But currently we have been overweight consumer discretionary, largely over consumer staples year to date. Can we drill down a little bit into that, and why are you positioned as such, and what are some of your bigger positions?
Yeah, absolutely. As you say, that's ostensibly a surprising position to have, given the environment I just described. But as you know, much of our positioning is an outworking of our process, which is driven by earnings leadership, quality and valuation. That said, risk management and portfolio construction are key to our process, and the outworking of all those factors has been, as you say, an overweight positioning in consumer discretionary names and a slight underweight in staples. Although when we view it through this lens, I think it does sort of cloud some of the nuance in that two of our larger names in the discretionary space are Car Sales and Aristocrat, which for their own reasons are more idiosyncratic and have less macro exposure to the consumer environment in Australia. But we do have a direct domestic consumer play in super retail, which has been performing very well for us, thankfully. As far as staples are concerned, again, it's more of a portfolio construction outworking. We have quite a large exposure to Woolworths, which in large part is funded by no holding in Coles. So that reduces the sector bet that may otherwise play out there. We're comfortable as it currently stands.
Sounds good. And so let's take it a step further and just talk a little bit about one of your topics, car sales. We've been there for a long time. It's been one of our bigger active weight positions across our Australian funds. So please, can you tell us, why do you like the company so much? And even after a good performance, why do you still continue to like it, and the outlook that you have from here?
Yeah, absolutely. Yeah, as you say, Car Sales has been a long-standing holding for Alphinity. It's been in our core portfolio for a number of years now, and it remains one of our biggest active positions. It's a unique investment proposition in that while consumer discretionary, technically, it has a very robust international business, a strong domestic business model and competitive positioning, and also a very compelling growth runway, which we think positions it more as an idiosyncratic investment rather than one that's likely to be driven by the macro in the short term. as you say, it has performed very well in an absolute and relative perspective. So the valuation upside isn't what it once was. As I say, the compelling growth opportunities here and abroad leave us pretty comfortable to maintain a large active position.
Fantastic. Thank you, Jake. Thank you for listening. For more information from Jake and the team, please visit our website on alphinity.com.au. Thank you.